Hello everyone, thanks for joining us this Wednesday and welcome to the Specialist Trading presentation. Now today, in today's educational class, I'd like to answer the question that the market keeps making new highs, so why do you keep losing? I can't tell you how many times new students or even prospective students will say, well gosh Steve, I just keep losing money even though we keep going higher and higher. I don't know how to trade this current market. For example, as we look at this chart here in the QQQs, we see that the QQQs, the index and the ETF that actually mirrors the NASDAQ index, generated a profit or gain actually of 35 points in 3 months. That comes out to about 2,000 Dow Jones points. And most traders during this time have had a very difficult reaction to trading markets like this. The reason is most of us have been trained to fight the markets, or we always think that, well, according to this indicator or according to this index I look at, we're far too high or overbought, or the institutions are selling now, so I must do the same thing. And that's really why we're really losing money, because we're trying to fight the market. The good news is I'm going to share with you 2 techniques today that can actually have you wanting, actually I should say, what the market wants. And this actually generates signals. For example, as we look here in the QQQs, we would have seen that a buy signal was generated here, another one here, and then still another one here. Now this process has been formatted on our platform, the PTS Primo charting platform. This is the educational platform you've been searching for because it actually teaches you how to become a consistent trader. So welcome once again. My name is Steven Primo. I'm the president and founder of Specialist Trading. This is going to be a great educational class because not only am I going to answer that question why you may have been losing money this past 6 months or so while the market's been going straight up, but also we're going to share with you 2 techniques that will actually help you to become consistent with markets like this, whether they're going straight up or straight down. Now, I've been trading for a total of 43 years now. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 19 years, and 6 of those years I was actually a specialist. So a specialist is someone who made markets in roughly about 50 or 60 stocks. So if you wanted to buy or sell a particular equity, you went up to the trader who specialized in making a market. So that's where we get the name specialist trading. I traded through the crash of 1987. I made markets during the bull market after that. And so I've traded just about every technique, every method you can think of. I have traded just about every market environment you can think of. So why waste your time searching for that holy grail when I can tell you right now what works in terms of consistency and what doesn't? So that's why we formulated Specialist Trading. Along with Pro Trader Strategies, we teamed up simply to educate you on the things that have high levels of consistency. And the reason why we want to educate you is that ultimately you'll be in charge of your own trading. Once you're educated, you can make your own trading decisions. And that's our goal, to put you in the driver's seat. And you'll see that today with the attention to detail we give in trying to educate you in today's short class. Now, before we begin, we're required by law to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these techniques and getting you in sync with the market, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also please remember that all examples in today's class are strictly for educational purposes only. Now, once again, if you haven't done so already, I want to invite each and every one of you to follow us on Twitter. There's our handle right there. I would suggest copying that down or writing it down. I post different educational information on a daily basis, anywhere from information about our methods and strategies to signals that our strategies have generated to little bits of financial wisdom along the way. So lots of great free education. Please feel free to follow us on Twitter. Now, as I stated in the opening statements, we are different from other webinars you may have attended in that our only goal is simply to educate you. We're not here to tell you what to buy as soon as this webinar is over to place an order, or we're not here to tell you what the perfect market is or the perfect time frame. That's up to you to decide. Most students would say, well, Steve, I don't have the information to decide. I don't know how to do that. I haven't been trading long enough, or I'm not skilled or experienced enough. Well, that's where we come in. You see, our goal is, as an educator, is to teach you how to trade. It's not to force feed you signals. It's not to tell you what to buy or what to sell on a nightly basis. It's not to provide you with a chat room so you can come in and see what everyone else is doing. Those are all recipes for disaster as far as I'm concerned. And the entire industry is based on, having you make your decisions that way. But if the entire industry is based on that, then why do 80 to 85% of all traders fail? It's because you're taking yourself out of the game. You're not making your own decisions. So once you have the proper education, once you've been taught and mentored, then you can really not have to rely on anyone or anything else. That's our goal, to teach you how to trade with the specialist edge. This is the same edge that was taught to me when I was struggling some 4 decades ago, and what I truly believe is the cornerstone for having sustained me that period of time. So hopefully we'll be able to do the same for you. Now, in today's class, I want to take as many questions as possible, but we have a good crowd here today, so I don't want to take all of your Wednesday. So if you have a question, please write it down or try to remember it, and I promise I'll get to it at the very end of today's class, okay? The only question we do answer is this being recorded? Yes, it is. So if you have to leave early or if you're having technical issues, we will send each and every one of you a link to today's recording, all right? Okay, so once again, if you join us late, please wait till the end of today's class to ask any questions. Okay, so let's begin today's educational trading class. And I'd like to start out with giving you a little bit of financial wisdom, because this is really the basis for today's presentation. Most traders feel that the reason for trading is to make money, right? I mean, how many times you've been told that? I'm sure you've gone to webinars or to seminars or read books where they say, if you're not here to make money, then you shouldn't be trading. Well, I have a slightly different opinion of that, because my mentors taught me this. They said, the main purpose of trading is actually not to make money. That's not the main purpose. The main purpose of trading is to be in sync with whatever market you are trading. Then making or losing money is simply a result or byproduct of that process. Now think of it. If you're making money, doesn't it stand to reason that you're in sync, or you're basically in tandem with what the market wants to do? And obviously it would stand to reason that if you're losing money, it means you're out of sync. So rather than focus on making money and trying to hit a home run or trying to pick the top or the bottom, that once again is a recipe for disaster. Why not just focus on being in sync with whatever market you're trading, regardless if it's a 15-minute time frame, a monthly time frame, regardless if it's Bitcoin, stocks, futures, it makes no difference. But ultimately, your main goal should not be trying to make money. That's the result. That's the byproduct. Your main goal should be in sync with whatever market you're trading. Because once you're in sync, once you're wanting what the market wants, well, then you'll see the results pile in that are in favor of being in sync with the market. So let's start off with rule number 1. What we want to do is we want to get you in sync, firstly, with the overall trend. That usually goes anywhere from 3 to 6 months. So we want to see that we're in sync with the overall trend. How do we do that? Well, it's simple. Whatever strategy you're trading, whatever method, I really don't care. If you get a buy signal, it can only be entered above the 50-period moving average. All right? It's that simple. As we look at this generic chart here, someone would say, well, Steve, there's no trend. There's no overall trend. We're going down, back up, back down. But once we apply the 50-period moving average, we ask ourselves, where is price in relation to that 50-period moving average? It's above, right? So if price is above, what is the market telling you? All right? Remember, we're not going to talk about what's some guy in a chat room telling you, or what's some guru telling you, or what's some indicator telling you. No, what is the market telling you? The market, if price is above the 50-period moving average, is telling you the overall trend is up. Now, this is an ideal scenario. Sometimes you'll see in today's presentation, all you need is one bar to be above, as long as all the requirements are met. But the overall trend is basically when price is above the 50. Now, let's look at the sell side of the angle here, okay? Because if you have a sell signal, say you want to buy puts, say you want to go short the market, that order, that sell signal order, can only be entered below the 50-period moving average, all right? For example, at this generic chart here, doesn't look like anything's happening. Basically, it looks like a sideways market, right? We're going down, back up, back down. But once you apply the 50-period moving average, you ask yourself, where is price in relation to that 50-period moving average? It's obviously below. So now that it's below, what is the market telling you? Not me. You know, I don't have chat rooms here. I don't have trading rooms where I tell people what to do. What's the market telling you to do? We want to be in sync with the overall trend, and the overall trend is down. So therefore, we'll only be a seller if price is below or our entry is below the 50, and we'll only be a buyer if price is above. So right off the bat, we've eliminated half of our scenarios because we're now in sync with the overall trend. Now we go to rule number 2. because that's the overall trend. We want to, minimize it a little bit. Let's be in sync with the short-term trend. So how do we find that? Well, let's say your strategy is above the 50, okay? But when do we get in? I mean, what's the ideal place to get in? Well, once your strategy, whatever method is based on, we don't care, generates a buy order where all the rules and requirements have been met and it's time to buy, that signal must close in the top 25% of its range, okay? So in other words, if we have our bar here where all the rules have been met, let's say it's on fundamental news, let's say it's the earnings, whatever, you're above the 50, you say, okay, Steve, I guess I'm in sync with the overall trend. You want to enter or wait to enter until you see a bar that closes in the top quarter. Well, now, why are we doing that? Well, remember, we want to be in sync with the short-term trend and what the market is telling us. Not me, not some guy, some institution, not some guy on TV, but what the market is saying. It wants to go higher on the short term. So now you have the short term in sync with the overall trend. Okay, so we look at our example here, our generic example. We have two examples where we close in the top 25%. And here we went up for a bit and then came out lower. But this time we closed in the top 25% and really went up a lot. So you see how you've just put the odds in your favor. Now this can work if you're going short. If you have a sell signal, if you want to buy the puts, don't buy until the signal bar closes in the bottom 25% of its range, or wait until you get a bar that closes. Don't try to sell at the top. I mean, that can happen maybe 1 out of 10 times. And the other 9 times it doesn't happen, you'll lose a lot of money. So wait for it to close in the bottom 25%. As we see here in this generic down bar, we want it to close in the bottom quarter of its range. So why are we doing that? Why would we want to wait for that bar? Why can't we close at the high? Don't we make a lot more money? Remember, we want to be in sync with the market. If we close at the high, we may not be in sync with the short-term trend. And when we close in the bottom 25%, the market is telling us it wants to go lower. Remember, we wait for the market to tell us what to do. So as we look at this example right here, we have a bar closing in the bottom 25%. All right. Now, sure, we could have sold up here, or we could have sold here on the first up bar, thinking, or second up bar, thinking, okay, I'm going to make some money, and then it goes up for another day or another week. Say these are monthly bars. Say it goes up for another month. All right. And most likely you would stop yourself out and say, boy, I'm taking too big of a loss. But then if we wait for this bar, look what happens. Okay. You see how you put the odds in your favor. You have the short term in sync with the overall trend. Now you can apply this right now to any strategy you have, and we really feel it will increase your odds for consistency. Someone could say, well, Steve, the strategies I have are useless. They haven't been making money in months. I'm ready to throw them out the window. I don't have anything that works. Here's the good news. Let me introduce you to the strategy that I was first taught some 4 decades ago by my mentors. And it contains these 2 rules. This is strategy number 4. To date, this is our most consistent strategy and our most popular. It's traded in over 115 countries around the world by our students and in every state in the United States. So some of the highlights of this particular method, it was designed for traders looking to catch momentum. Okay, the beauty of this is many times it will see a setup, or the requirements will be met before the momentum even has started. So many times you'll see a sideways market, you'll get a signal, and then the market will go straight up after you've gotten the signal. It does this by using a unique pattern. That's why it's a pattern recognition strategy. And we teach you what this pattern is in the course. Now, it only uses one indicator. That's how simple the rules are. I believe there's only 4, possibly 5 rules to this method. And guess what? You've already got 2 of them, all right? Because the indicator it uses is the 50-period moving average. Now, let me share with you some recent strategy number 4 signals, and let's go through the process, okay? And the beauty of this is that there's a specific process to trading this, and we implemented it in our platform, the PTS Primo charting platform, so that you could go through this process and educate yourself and learn exactly what to do, so that ultimately going down the road, you wouldn't need to be listening to anyone or anything else. You could simply look at any chart and know exactly how to identify a strategy number 4 setup. Okay, so here's the process. Let's look at this older chart in VLO. Once again, most traders looking at this, the way they've been taught, would say, well, Steve, look at this. We're in a range market. This is where you get whipsawed. And I think there's some major selling here at the top. So if we get up here, I think I'll be a seller, because most likely it'll come down here, then I'll buy again. And then when we get up here, I'll sell. Take advantage of this range, right? just use the overbought, oversold oscillators and just go back and forth. All right, that's the way most traders, myself included, are taught to trade. But what is the market telling you? Forget about, what some guys taught you in some seminar. What is the market telling you? Well, the way to find out in this process is to go to the upper green strategy tab right here and click on buy sell line. That tells you whether you will be buyer or a seller. First thing you do is you click that on, and you'll see in the drop down menu we have 4 different ways to viewing the buy sell line. Let's click on the simplest, which is the 50-period moving average. And once you see that appear down here, you ask yourself, where is price in relation to that 50? Price is above, right? So what is the overall trend? Should you be selling? No, the overall trend is up. You'll never be a seller if the overall trend is up. Right there, you've just added or increased your consistency tremendously. Remember, the title of this presentation is Why Do You Keep Losing? Well, this is one of the reasons. You're out of sync with the overall trend. So now that you know the overall trend, let's go to rule number 2. We want to be in sync with the short-term trend. And the way we do that now is look for bars that close in the top 25% of the range, all right? And we see here, there are 1, 2, 3, 4. Okay. Now the next rule is looking for that pattern that matches these bars in the top 25%. I'm sorry, I cannot divulge rule number 3 with you what that specific pattern is. It wouldn't be fair to all of our students around the world who've paid good money for this strategy. But I can just tell you right now that let's say after you've taken the course, you would be able to identify that, well, out of these 4, I believe only 3 are valid. This one isn't valid because it doesn't qualify within the pattern, but these 3 do. So the process says on our platform, how do you check your work? Because you may just be guessing. How do you know you're right? Click on strategy number 4 in our green strategy tab in the drop-down menu. Click on signal arrows. These are educational arrows purposely put there for you to check your work. Once you click that on, you see that you were right. There was no signal generated here, so it wasn't valid, and you were right. These were all valid signals. Now, someone could say, well, Steve, the market's going sideways. Why would you want to buy? And I think that there's some selling pressure here, and this is a Fibonacci resistance line, so I don't want to buy anything. Remember, I've traded all those things. I've done the hard work for you. I've never, in my personal opinion, found any consistency in Fibonacci, in support and resistance, in moving average crossovers, in volume, in institutional decision-making. There's no consistency in those. So why not just listen to what the market's telling you? And as you can see, the market told you it wanted to go higher, and a week later, it was up roughly about 17 points in the next 3 weeks. Now remember, we are not a predictive training class. In other words, we don't tell you how high something will go or how low something will go. We're just trying to get you to learn how to be in sync with the market. In our course, we give you upwards of 7 different exit levels, and we also give you 7 different entry points and 7 different stop placements. Remember, we teach you so that you can decide which one of these makes you feel the most comfortable. This can also work to the downside, all right? Let's look at GIL. Once again, the way we're all taught is, well, hey, this is major support here, right? Now, Steve, I took that online course about the institutions, and this is where they're all buying. Look at this major support here. And on top of that, I'm a candlestick trader. There's a bullish engulfing pattern right here. So this is all positive to me. Look at it. It wants to go up. So I'm a buyer. I don't care what you say, Steve. This is telling me it wants to go higher. And the institutions are never wrong, right? Well, trust me. I traded with the institutions when I was a floor market maker on the stock exchange. And those guys showed no higher level of consistency than anyone else. So why would I rely on them to base my decisions off of? Remember, my mentors taught me the most important thing is to be in sync with the market, not to be in sync with the institutions, not to be in sync with some guy on TV, to be in sync with the market. So how do we do that? Well, we go to the upper green strategy tab in the upper left-hand corner, click on buy sell on. Click that on in the drop-down menu, click on 50-period moving average. It's the simplest way to view the buy sell line. We have 3 other different ways, but let's just take the simplest and easiest one. And so now, where is price in relation to that? Is it above? Because if it were above, then yes, then we would look at this from a buyer's point of view. But no, it's below. So not me, not some institution, but what is the market telling you? It's telling you the overall trend is down. So therefore, you should not even consider being a buyer. All right, now we go to step number 2. We want to look for the short-term requirement of bars closing in the bottom 25%. Now we have a total of 4 that we think meet all the requirements. Obviously, there are some more here closing in the bottom 25%, but they don't meet the requirements. So let's check our work. We click on strategy 4, click on the educational signal arrows, and guess what? We're right. So pretty soon we won't even need these arrows. We won't even need to be in front of our computer. We can look at any screen, we can look at any chart, and we'll know where strategy number 4 setup is. That's what we do. We want to educate you so that you'll never have to rely on some guy in a chat room, on some guy on TV, on some institution, on some major indicator. You can be in charge of your own trading destiny for the very first time. In my opinion, this is the only way you can become consistent. And as you can see, the market fell 12 points following that. And someone can say, well, how did you know that was going to drop down like that? Do you guys follow the fundamental news? Because that most likely was on something with the company, some bad earnings or something. No, I stopped looking at that 4 decades ago. The only thing I look at, and the only thing I teach my students around the world is how to listen to the chart in front of you. That's all you need to know, in my opinion. All right, so let's look at some recent strategy number 4 signals. And what we're going to do is look at the Fang T stocks, okay? Because those are stocks that really took off this past month or so that you could have taken advantage of. If you're not familiar with Fang T stocks are, the term Fang T refers to the stocks of 5 of the most popular technology companies. Now, each of these companies has shown extraordinary growth in recent years, with each member more than doubling over the past 5 years. So in the last couple of months, these have been the stocks that would have taken off. And most likely, if you're trading the way 80 to 85% of most traders are, you would have been selling into these stocks. So let's show you how you could have been making money. Now remember, we don't tell you how to trade these. In other words, we just teach you and what to look for, and it's up to you if you want to buy the stock, if you want to buy the options, if you want to buy some option spread, that's your decision. We just teach you these high probability setups. So what are the Fang T stocks? Well, they are Facebook, Amazon, Netflix, Google, and Tesla. Excuse me. And just to make things more interesting, because it has been making extraordinary gains, we're going to include Apple in there too under the A category. Okay, so let's start out with Facebook. All right. As we can see, as it's been going up since October, it's been above the 50-period moving average. Each one of these buy signals closed in the top 25%. So these are 2 rules I taught you. Now, there's something I want to share with you today. As we can see here, and I don't want you to forget because I'm going to address it later on, look what happened just a couple of weeks ago. Something happened where it really fell out of bed. I'm going to share with you later on how you could have still made money being long and buying at the end of January. But even taking this very first signal here in October, that's 38 potential points you could have captured. All right, let's look at the A's now. Amazon, all right? The same thing. We have a buy here in December. It just barely closed above, but it's still a buy. Had you held on and even taken advantage of the next one, ultimately coming into the second week of February, 410 points potentially you could have captured. Now you notice here how the beauty of strategy number 4, it catches this momentum before the momentum has even started. As you see here, the stock was going lower. It told you to get in, that momentum was about to ensue. A week or so later, look what happened. And then we had a sell-off here for a couple of weeks. Before the momentum ensued to the upside, it told you to get in, and then look what happened. That's the beauty of strategy number 4. Now, it's extremely consistent strategy, but remember, consistency means that there will be losses from time to time. That's okay, as long as you have a consistent method. Many times the next signal is able to recoup that loss. Let's look at this example here in Apple. As you can see, we kind of had a sideways market. A buy signal, 2 buy signals were generated before it went up. Then we sold off here on a gap down. A buy signal was generated on that sell-off before the momentum continues to the upside. And now that we've been kind of going sideways for a bit, 2 buy signals have still been generated. Now, had you taken the very first couple of signals, potentially you could have captured close to 80 points in the following months. Now, here's what we mean by consistency. Looking back to November in Netflix, a buy signal was generated. All of these buy signals are all above the 50. As you can see here, nothing was generated to sell. It's only generated to buy. That's how you increase your odds for consistency. And then each and every one of these setups closed in the top 25% of their range. Now, these 2 signals didn't fare very well. As you can see, they went down. But look at the very next one. You could have been able to make all that back or more had you taken that signal and then taken another one and then even taken another one. Potentially you could have captured upwards of 95 points. As you look at Google, everything is above the 50. We're not selling at all. And all the buy signals were generated in the top 25% of their range. Potentially you could have captured 235 points. And then lastly, the darling of the markets as of late, Tesla. Tesla has been going straight up since November. This is where traders love to play the victim game. They love to say, boy, how come I didn't get involved in that? I could have made so much money. I wish I would have known. Well, all you have to do is apply the 50-period moving average, and in October, actually September, October, price was above the 50. Look at the two buy signals that were generated here. You could have actually taken advantage of those, and if you missed those, there were two generated at the beginning of January, okay? Now, I took this snapshot last week. I believe Tesla is even higher. I believe it's back up to these levels. Potentially, you could have captured over 700 points using just these setups by the two rules that I taught you and then that pattern as well. Now, let me share with you some other time frames and some other markets because we know that not everyone can trade these expensive high flyers. Let's look at some other time frames and other markets, and we'll look at some scenarios where the market actually went down because not everything goes up. For example, here's that first chart we share with you, the QQQs. Remember, most traders saying, boy, this market has been going straight up. Why do I keep losing money? Well, the first thing you want to do in the process, no different if you're applying this to an index or the ETF, is to simply apply the buy-sell line, the 50-period moving average. We knew well in advance that the QQQs were above the 50-period moving average. So there was never any reason to think that the market overall trend was going lower. So all you had to do to view this was look at this from a buyer's perspective. Now, that's just the overall trend. Now we have to find the short-term trend. Now, coinciding that with the pattern we taught, there are three distinct setups here. In order to check our work, we click on strategy number 4. In the drop-down menu, click on the educational signal arrows, and guess what? We were right. All of these buy signals were valid, generated by strategy number 4. And guess what? You would have learned how to do that and how to spot them on your own in the course. You don't have to wait for earnings. You don't have to wait for some economic news event to happen. You don't have to wait for the institutions for volume. It's right here in front of you. Now, this 35 points that potentially could have captured generated roughly about 2,000 or so points in the Dow. So you could have used this as a directional tool, simply as something to tell you that the market wanted to go higher, and that was just telling you that you're going to be in a nice upward move. Now, here's another example of how traders like to trade, and this is why most traders fail. Now, someone could say, okay, Steve, I've applied this to the indexes, and all the indexes are going up. So that means that every stock's going to go up, right? So I'm going to be a buyer of this stock, AEM, because it's basically in a good range here, and I'm sure that this is major support. So if the Dow is above the 50, that means that this is going to go higher too, right? Well, you can look at it that way, but our philosophy is trade each stock for what it's telling you, because not each stock goes with the market. We all have seen that before. So what is this telling us? Is it telling us it's in a range market? Well, sure, but is it in a range market in an upward or total overall upward environment or overall downward environment? The only way to check is by clicking on the buy-sell line, click on 50-period moving average, and guess what? Yes, it's in a range, but in an overall downward trending market. So that means, are we going to be a buyer? No, we're going to look for selling opportunities. So now we look for the short-term identification, and there are 3 bars that close in the bottom 25%, okay? Now, if you're a member of the course, you know what the next step is to look for that pattern. Now, having studied that, you say to yourself, well, the only one of these 3 that fits that pattern is this one right here. So let me check my work. You click on strategy 4, click on educational signal arrows. Guess what? It's a valid signal. So yes, you are right. So you are in sync with the overall trend. You're in sync with the short-term trend. You've identified the pattern, and now it's up to you. You can short this by shorting the stock. You can buy the puts. You can do whatever you'd like. You're in charge for the very first time of your trading destiny. You don't have to rely on some guy in a trading room. You don't have to rely on some guy on TV. You don't have to rely on any institution. You don't even have to rely on some guy in a webinar. You are in charge. Remember, in my 43 years of trading, the only way one can become a consistent trader is by making your own trading decisions. So this is what we teach our students. And once we taught them, you're free to leave. You don't have to stick around and come every day to see what the buyers sell because you know what to do. And as you can see, AEM fell 10 points the next day. Now, how did we know that? Well, we didn't. We didn't know it was going to gap down like that. We just knew that the market was telling us it wanted to go lower. Here's another example on CARG. 3 sell signals, some better than others. Same thing, it gapped down 12 points in February. So our suggestion is up to you. We're not telling you how to trade. We're simply teaching you is to take each individual stock or market on its own behalf. In other words, you can say, well, if the overall market, if the Dow Jones is above its 50, then I guess that I should buy this stock. No, I would look to see that the stock is also above the 50. Now we can look at a weekly chart, apply the same process. Here we are, even though we had a couple of closes below, we closed back up above 50 in the top 25%. It met the pattern requirement, and look what happened. Look at how right off the bat, the momentum ensued to the upside. Could have potentially captured 62 points coming into the end of the year. How about a monthly chart of RRC? The same process. Nothing changes because we look at a different time frame or a different market. We're below the 50, so we don't want to be a buyer of this on a monthly time frame. And look at how every time we had a little bounce here, sell signals are generated. Every time we bounce where everyone's thinking, oh, okay, this bottomed out, the momentum was signaling that I wanted to go lower, and so on. How about a 4-hour chart of the Australian dollar? Nothing changes because we applied this to a 4-hour different market. Okay, now this was a little bit more advanced because the majority of the bars were below the 50, but this bar closed above, and that's enough to have a valid buy setup and a quick 130 pips, or roughly about $1,300 per unit, you potentially could have captured in the next 4 or 5 days. And lastly, what about intraday trading? What if you intraday trade the E-mini? All right, well, look at this market. In hindsight, excuse me, most students would say, well, yeah, Steve, in hindsight on this hourly chart, yeah, it's been going down, but I want to know back up here that we were going lower. Okay, well, you apply the buy-sell line, 50-period moving average, and guess what? We were above the 50 up until right here, and that's where you knew not to be a buyer, to be out of this, okay? Now you look for the bars that close in the bottom 25%, you check your work, and guess what? There's a sell signal right there, another one generated here. Potentially, in the next couple of days, you could have potentially captured 100 E-mini points. That's roughly about $5,000 per contract. All right, it would have been up to you. You could have stayed in. You could have gotten out with 1 point gain. You're in charge, not us. We don't tell you how to trade. We just teach you how to trade. Okay, so let's recap before we go into the question and answer portion. Remember, always, regardless if you use one of my strategies or one of yours, apply the buy-sell line. That's the 50-period moving average. If price is above, the market, not me, not some institution, but the market is telling you the overall trend is up. If price is below, the market is telling you the overall trend is down. Therefore, you can only be in sync with what the overall trend is doing. You automatically will increase your odds for consistency by applying this simple rule. In fact, I dare you to go back and look at your last 10 or 20 trades. Most likely you lost money because you were buying below the 50-period moving average and selling above. Go back and check your work. I can almost guarantee you that's what happened. Once you know the overall trend, then look for the short-term trend to be in sync. That's by using the top or bottom 25% to make sure that you are in sync with the short term, okay? Now, these two rules will increase your odds for consistency tremendously. Now, they make up 2 of the rules to one of our most consistent strategies, strategy number 4. I've given you 2 of the rules already. There's only a couple more that need to be required in order to generate a signal. Once you become a student of mine in the strategy number 4 course, we make it simple by providing you with the PTS Primo charting platform because it's a simple process to apply for generating signals. We teach you what that is, and then pretty soon you don't even have to rely on it. You know automatically how to identify valid strategy number 4, buy or sell signals in any market and in any time frame. Wouldn't you love to be at that point now where you don't have to say, okay, well, I guess I have to subscribe to this guy's website or this blog, or I have to wait to see what the earnings are. You'll be free. You don't have to wait for those things. You're free to make your own decisions. That's where consistency starts. So ask yourself, do you think this strategy can help your trading going forward into 2020? I think the answer is resounding yes. So therefore, we have a special attendee offer for all of you today. We are going to offer you strategy number 4 at a great offer, at a great discount. This is instant course access, detailed instruction. You'll learn all the entries, all the exits, and all the stops, and including that requirement with that pattern to search for that happens in all markets, in all time frames, and in all directions. Now, included with this, we want to include 12 months, 1 year of our platform so that you can go through that process. Now, this is normally going to cost you close to $1,000, but guess what? We're not going to charge you anything. We're throwing in a full year of our platform absolutely free. You can go through that process for identifying valid strategy number 4 signals. But the beauty of our platform is we don't just stop at strategy number 4. There is just so much information on our platform. In fact, I would venture to say 43 years of all the information and of all the tips and techniques I've accumulated are on our platform. All of these things you see here are on the platform that will be yours, that you can use along with identifying that process through the strategy number 4 signals. But let me share with you one of the things that you won't find anywhere on any other platform, and that's our proprietary exit levels. This is a great feature in and of itself, because so many students say, well, Steve, God, I love your stuff, and can you tell me where to get out? Well, I don't tell you where to get out. We have roughly 7 different features and ways in which to exit a trade. Let me share with you one of them that we've applied onto our platform. It automatically generates these exit levels for you. For example, here was a signal generated, strategy number 4 in LPSN just about a month ago in January. All right, buy signal was generated. It closed above the 50 in the top 25%, and the stock took off. You have a nice profit. Here's where students have a very difficult time, because many times they'll wait too long and then this happens, right? Okay, and they'll say, well, Steve, this doesn't work. You got me into this and now I lost money. Well, here's the feature we've added. And remember, this is just one of our exit features. There are 6 more that you can apply, not necessarily on the platform, that we teach you how to apply them. But with this, you would just double click on the arrow and automatically you'd see that it generated 3 exit levels for you that you could have taken advantage of prior to the sell-off. And remember I said about Facebook earlier today, remember I said that, well, what happens, how could you have made money when this happened? Well, double click on the arrow and a signal was generated right here, roughly, just I would say about, a half point below the high of the day before this happened. So this is coming and included on the PTS charts as well. It's a great feature. I use it all the time. And this is once again included with this great offer. So let's break it down. You're going to get instant course access, all the entry, exit, stop rules, automatic buy and sell arrows, and educational correspondence as well. You'll get my personal email to email me whenever you'd like if you have a question. All right. What this normally costs is close to $1,700, okay, which includes the 12 months of the PTS Primo charting platform. We're going to drop that down tremendously. We're not going to charge you that. We're going to drop it down only to $695, okay? That includes 1 full year of our PTS Primo charting platform. This is a great price. And included with that, I think for a limited time only though, our payment plans. Pro Trader Strategies said they will include payment plans. So even if $695 is difficult for you to come up with, you can have a small deposit and just have a payment plan to pay off that $695. This is a great way to get your trading in sync with the market. Now, trust me, for more information, all you have to do is contact Pro Trader Strategies, but I would really highly suggest calling them at area code 310-598-6677 if you want more information about the discount, possibly putting together a payment plan, or maybe even purchasing another strategy included with strategy number 4. That is who you want to talk to, because they're in charge of all of our discounts and all of our strategies and the tech support. Now, that link you see at the very bottom will take you to the sign-up page. It's also the informational page for the strategy number 4 online course. but it's not a live link. They've just posted a live link in the chat box on the GoToWebinar column on the far right. So you can go to that column there and just simply click on the link in the chat box, and it will take you to that informational page. Now, I promise you I would reserve the last portion of today's presentation to answer any questions. So if you have any, now's the time to ask. I see some people lost their sound. Many times that's due to your internet connection. So don't worry, we will furnish each and every one of you a link to this recording. Let's see, Carlos is asking, sometimes the 50-period moving average from the 15-minute is uptrend and the 60-minute moving average is downtrend. So what to do? Okay, this is a very common question. And in fact, I actually think that this is probably one of the most common questions I get from beginning students of mine. They always say, well, Steve, I was always taught that the higher time frame is supposed to be in sync with the lower time frame. So that means that I'm trading, let's say, a 15-minute time frame, and the 15-minute is below the 50, but the hourly is above. So what do? Do I just wait? Well, let me tell you my opinion. I was taught the same thing roughly about 40 years ago, that you have to have those two and time frames in sync. If you're trading daily bars, the weekly must be in sync and so forth. It's my opinion that there is absolutely no consistency in using that method. I have never found any consistency. In my opinion, it's an urban myth. In fact, the only thing that has done for me is to make me miss trades while I'm waiting for the two to line up. So, once again, our philosophy is not to tell you how to trade, it's to teach you. If you want to apply that, you can do that. But as I said earlier in today's presentation, only trade the signals and the information on the chart in front of you. Therefore, if you're trading a 15-minute chart, then that's the only information you should be getting from the 15-minute chart. Don't worry what the hourly is doing. I stopped looking at this 40 years ago, and my trading has become more consistent. Now, if you want to, if you feel like, oh no, Steve, that works for me, well then go ahead. But other traders don't like that, like myself, and we stopped using that ages ago. Because once again, in my opinion, in my experience, I have never found any consistency in matching up two time frames. Now, remember, in today's class, I shared with you the first two rules, how to be in sync with the overall trend and the short-term trend. Now, that is a perfect substitution for having to look at two different markets. The 50-period moving average will get you in sync with the overall trend, and where bars close in the top or bottom 25% of their range will get you in sync with the shorter. Now, that's the same concept, but so much simpler because it's right there in front of you on the same time frame. So if you're asking for my opinion and my suggestion, I don't use that, but it's up to you, all right? Another question, Wayne asked, will this work on the Forex market too? Yes, Wayne, we have so many traders in Europe. We have a lot of European customers that trade only the Forex markets. And yes, it works tremendously. In fact, go back and look at this, apply those first two rules. Go back and especially look at if you're in, oh, great, Wayne, okay. Look at the Australian dollar, okay? It's been going much, much lower. Now, see how the 50-period moving average could have helped you with that, all right? I'm not going to tell you where the signals were, but see how the 50-period moving average told you well in advance, or the euro dollar, same thing. The euro dollar has been heading lower. See how that could have helped you with the 50-period moving average. Then look at all the bars on daily bars that closed in the bottom 25% of their range, okay? These tools work in any market and in any time frame. And then I shared that 4-hour chart with you. I believe it was on the, I believe that was on the Australian dollar. That was an old one. But go back and check. And then once you do, I think you'll be convinced that, wow, this really works. So then the next step is to take advantage of this great offer, okay? Does this offer give access to stocks and Forex data feed? Yes, it is, Robert. It does. We have access to that. We also have access to data for Asian markets, also for currency pairs, as well as commodities, Bitcoin, futures. But for more information, really contact Pro Trader Strategies, because remember, once again, they're in charge of all the tech support and of all the data and things of that nature with the platform. My category, my feature is mainly teaching you how to trade. Then their job is mainly the tech support and all of the pricing and the discounts. Now remember, I would suggest contacting Pro Trader Strategies. There's absolutely no obligation. They would be more than happy to work with you And there's absolutely no obligation even for phone calling. They'll give you a quote or talk to you, and they're not going to try and force you into, or pressure you into any sale. But this is a great, great offer. And remember, this is for a limited time only. Next week, we will have an entirely different offer. And if you sit on this too long, and then you contact Pro Trader Strategies and say, you know what? I saw that webinar that Steve gave on strategy number 4 for $6.95. I think I want to take advantage of that. Well, that may be back up to $16.50. So you don't want to lose this great offer. If you're really serious about this, I would say, take a couple of days to think about it, but then after that, it may be over. So really, we're not trying to pressure you, but we have so many other things. The last presentation I gave, the offer was for close to $3,000. That was a discount off of close to $7,000. So, it all depends on what you're looking for. But this is a great strategy. I trade this personally. I've been trading this almost every day in my personal trading in some capacity for the last 40 years. This was the first strategy I was taught. It's our most consistent strategy and possibly our most popular one because it's traded by more traders around the world than any other method we have. So remember, once again, for more information on pricing or on payment plans, contact Pro Trader Strategies. Lastly, someone's asking me about what is the educational correspondence? Well, you get my personal email, okay? So anytime you have a question, anytime something doesn't make sense or you don't really understand it, there's no hesitation. Email me, even if it's on a weekend or in the middle of the night, and I'll answer it as quickly as possible. So I'll be there trading right alongside with you, answering any question that you may have, okay? Okay, so I guess that's it for the questions. I hope you really learned something in today's presentation. I hope you can take those 2 edges I shared with you and go back and do the research. If you see that they could really help you, then take advantage of taking initiative and taking advantage of the entire offer with strategy number 4 and a full years of our platform. And there's so much more included on our platform we really feel can help you, okay? I wish you the best of luck in trading. As you look at one last time at our disclaimer, thank you so much for attending today. Thank you for taking time out of your Wednesday. But most especially, I look forward to all of you becoming students of mine in the strategy number 4 course. Thank you so much. I wish you the best of luck, and I'll see you next time. Bye-bye.